It's just 2005. We had 8 crore mobile phone connections and mutual funds. Around that period, there were 300 close-ended equity funds. When I look at both telecom and I look at the mutual fund industry, yes, there was growth, but I guess structure was not in place.
We never tried to be a market celebrity. No bold predictions, no dramatic calls. Just quiet decisions made responsibly for other people's money. That's S. Naren on MF Chronicle.
While people like you look at investor behavior very, very closely, a lot of triggers also come in from external forces.
Regulator has continuously looked after the interest of the investor, due to which the industry do well. And we have also come to a conclusion in ICICI, if the investor is not going to benefit, the industry will not grow.
Correct.
So I think both are factors which we have to keep in mind at all points of time, otherwise the industry won't grow.
How did the idea of a balanced advantage fund start coming in?
Nimish asked me a simple question: what can ICICI do to give investors a much better experience? I said a product which, as the market goes down, keeps buying, as the market goes up, keeps selling, and does not give a commitment of absolute return. In ICICI, once you create a product which is lower return, lower risk, this product will have so many customers. Because people don't need very high returns. They need lower risk.
Welcome to another episode of MF Chronicles. It's indeed a pleasure to welcome Mr. S. Naren, CIO ICICI Prudential AMC, as our guest today. Now, why have we called Mr. Naren to share his pearls of wisdom? I've heard several videos. In fact, Naren, I think if you are an analyst on a stock, I'm an analyst on Naren. I've seen a lot of your videos, and I think there's a certain constructive way, the way you think, the way you do things. But one of the things I think which you and ICICI Prudential have done, especially in the decade 2005 to 2015, is to actually galvanize an entire product category. Okay, most people generally talk about either equity or debt. Hybrids is not that sort of, if I can use the term, sexy word. You know, there are mixed sort of feelings people have. It's not as aggressive as equity. It's not as safe as debt, and we've heard this over the years. To move from balanced funds to balanced advantage funds and to create an entire category of that, and now that is spawning variants of it. I have been on the other side of the fence, and I've been watching this whole category grow, and you guys galvanizing it with grudging respect. So I thought it would be a good idea to talk to our viewers today on how this whole category has been built, how it has led to the growth of the industry, and what can we expect further. When you were examining, you started your career in ICICI Pru in 2004, and you were smack in the middle of it, right? What was your view when you were looking around? You're saying, okay, this is what I'm seeing here. You were an analyst at that point of time. You were a fund manager at that point of time, and you were already seeing the macroeconomic situation. You were seeing how things were developing in the mutual fund industry. What were your thoughts? How did you start going around your business in terms of what the competition was, what the landscape was, what the regulation was? Give us some thoughts on that.
See, whenever an industry is in initial phase, obviously some mistakes will happen. Go to the e-commerce industry. So do you think in the initial years they made their own share of mistakes, which is possibly, we will all remember it today also. Correct. So I think initially, like for example, take the closed-end funds. When we went and looked back when I became a CIO in end 2010, early 11, and both me and Nimish were looking at what was the construct of those closed-end funds. We allowed an exit. And people took the exit during the financial crisis of 2008.
Correct.
You launch a closed-end fund thinking you don't need to sell in panic because anyway they are closed-end funds. But you allowed exit. There were facilities to exit. And then they exited.
You're right.
So that construct was wrong. So when the next wave we started in 2017, we didn't allow any exit. In fact, we allowed only dividend option.
Yes, I remember that. There was only dividend option. Correct. That was a
Only
striking
dividend
feature.
option.
Correct.
So what happens is people think, no, see, at the end of the day, a mutual fund, as my CEO Nimish says, is a product for the investor. So you have to keep thinking, but doesn't mean that no one will make any mistake. So we realized that the mistake was allowing exit option, having a growth option when we should have had a dividend option. So we launched only a dividend option, so that if the market does well, we will sell, give dividends. So if you look at the second phase during COVID, nothing went wrong, because during COVID, there was no exit allowed. So during COVID, it allowed us to invest very aggressively. So it allowed us actually to make money during COVID, because we didn't make the mistakes of 2008 financial crisis. So what happens is you always learn from your mistakes. So so obviously what happened in 2007 phase closed-end fund was wrong. But did we learn from those mistakes? Yes, we learned from that mistake. We launched, if you look at it from 2017 onwards, or 2013 to 18, we must have launched 35 closed-end funds. But investor experience was fantastic, because we corrected all the design problems of the first phase.
So you said you corrected all the design problems of the first phase, right? And you identified a few. I would want to believe that there were some design flaws in the ecosystem itself. You could charge 6% to the investor in terms of upfront expenses over the life of the fund. So if it's a 3-year fund, up to 6% you could charge over 3 years. I think there were upfront commissions at that point of time. You mentioned exit. So if you start juxtaposing expenses plus an aggressive distributor behavior propelled by upfront commissions and then exits, I think it just went into a downward spiral
It
as
is
far as the
exactly
industry
like the
behavior.
telecom industry.
Correct.
When the telecom industry started,
Correct.
I'm sure the younger generation won't know that we paid to receive calls.
I think you should talk about that.
Okay.
Yeah.
I'm sure they won't know. So what happens? No, see, if you look at it, the regulator has played a continuous role in reducing the expense ratios. So if you ask me, due to that, the industry has grown. But see, these are all continuous. See, why is India today, why the Indian financial system is very different from what it was earlier. As the industry grew, a lot of the costs in the products have come down.
Correct.
So that's what has happened. So now that is part of the evolution. Imagine, do you think if you had telecom costs of 99, 2000, you would have so many phones, you would have now 800, 900 million subscribers. You won't have.
Correct.
So I think that is part of the growth, part of good regulation done by SEBI over the period. So that's what has happened. Yes. Were there design faults in 2007? Yes, there were design faults. But you have to remember the industry was very, very, in its infant stage. You can't look at it. When I joined ICICI Mutual Fund, I was given a value fund of 133 crores. And the company was happy with 133 crores. Today, if I went to my CEO and told we have collected 133 crores, he would laugh at my head of sales saying 133 crores. Today, that value fund is 50,000 crores. And so the point is that he will laugh at 133 crores. No? But was the company happy when we collected 133 crores in the NFO of value fund? Yes.
So just for the viewers, this thing to just update them. Way back in the day, in the 90s, incoming calls were 15 rupees a minute. And outgoing calls were 13 rupees a minute.
Yeah.
I think we had that ad which became very viral in those days, if I can use that term. One black coffee, please. It just reminded me of having coffee, just reminded me. And I think Reliance, in its first avatar, had just launched that Virendra Sehwag ad. I think those were the days when, and you're right, it's unstructured. My point was alluding to your observation about the design flaw and saying that some of it you identified. Some of it, I think, was also because the ecosystem allowed for these, escape gaskets, if you will. So they plugged the entire expense ratio part of it, that everything when you're launching an NFO will be borne by the AMC and not by I think that was a very, very big thing. And then, of course, the fact that you reduce the tenure of the
Exactly.
NFO. So, in a sense, I think as industry professionals, while people like you look at investor behavior very, very closely, a lot of triggers also come in from external forces.
See, regulator has continuously looked after the interest of the investor, due to which the industry do well. And we have also come to a conclusion in ICICI, if the investor is not going to benefit, the industry will not grow.
Correct. Correct.
So I think both are factors which we have to keep in mind at all points of time. Otherwise, the industry won't grow. The industry is very small. Then you won't have a benefit. Today, so I think the regulator has continuously looked at this fact, and that is the reason the industry has benefited. And but that is why, if that's the advantage. I think I joined this industry in 2004 October. I mean, if you ask me, like I keep telling all the people, you have to be lucky to be in the right industry at the right time. Say, I was in investment banking at one point of time. This industry works for the investor. Otherwise, it's a pass-through industry. Whatever you do, if we make mistakes, the investor gets hurt. But otherwise, it's a pass-through industry. We were very lucky that I joined a good brand at the right time in October 2004, just when the industry was about to take off. It was possibly the best equity investment that I could have done by joining the industry at the right time.
Correct. No, you're absolutely right. You just mentioned about e-commerce in passing. You were just highlighting a point. And I'm just laboring this point of closed-end funds before I just move on, because to my mind, it scarred a lot of individuals from investing in equity. For quite some time, after that, there were always murmurs of people saying that, not murmurs actually, voices of people saying that equity investment is something which we should not look at. And then, of course, the global markets cracked around 2007-8. Just a question which I wanted to ask on this, and it's something which has been playing on my mind. .com led to e-commerce. .com blossomed, cracked, and then it came back in a new avatar as e-commerce. So people have learned. 2005, whatever we talked about. So any fund which was launched in 2005, 6, and 7, assuming the global financial crisis wouldn't have happened, and you would have, if not a crack, at least a consistent, predictable run, how do you think it would have affected investor behavior? The reason why I'm asking this is because we've seen a secular bull run over the last, not secular, more or less a bull run over the last few years. I'm just trying to juxtapose that with what would have happened and how it would have affected investor behavior then versus what could happen now.
Maybe the growth of the industry would have been happened earlier. But you look at it, people don't recognize. When I joined this industry, you had liquid super institutional plan.
Yes.
Liquid institutional plan, liquid plan.
Correct.
So the industry would give special terms to people who invested larger sums of money. A regulator came and said, nothing doing. Even if an investor invests 1,000 rupees, 10,000 rupees, 1 lakh rupees, 1,000 crores, you have to pay. You have to work the same way. So you look at it, the regulator did lot of steps. So if you look at it, the fact that 2008 the market came down 50% did play a role in the complete growth of this industry. Today also we keep telling people that if the market does go down even 1 year for 20%, I think the growth of the industry will slow down. That is bound to happen if equity markets correct. I think that is going to happen. But having said that, see, you can't have a situation where market only goes up. Just because mutual fund industry wants it to keep growing up every year, it's not going to happen. And that is why what we have to do as a mutual fund industry, we have to offer all kinds of products, not focus on only something. We have to ensure that the investor is there with us all the time. That is what we have to do.
Which brings me to my next question. Again, this following from what the telecom industry was talking about. 2007, the iPhone came about.
Yeah.
It was not that you did not have a phone. You still had to make calls, right? An iPhone was not the most efficient way of calling at that point of time, correct? But it created its own category. It built on learnings from the earlier mobile phone categories, and it built its own category. And why I labored the point about equity and closed-ended funds so much, because you mentioned something about creating a product design, learning from product flaws. What were the discussions which were happening in your company when you were discussing a product like this? And how did the idea of a balanced advantage fund start coming in, considering that there was already a balanced fund category which was present, which was doing reasonably well? Okay, it was not doing super normally well. Maybe people didn't talk about it as much, but it was doing reasonably well. You had some companies which are giving regular dividends, etc., etc. What made you think of a balanced advantage fund? Was it from some investor learnings? Was it from some international precedents? Was it something which was very intuitive? I'm very curious to know how this went
Actually,
ahead.
very simple, actually. When Nimish and me, we were discussing in early 2011, why has this industry slowed down completely? We realized it is only because we didn't give a good investor experience in the 2007, 8, 9 phase. And Nimish asked me a simple question: what can ICICI do to give investors a much better experience? I said a product which, as the market goes down, keeps buying, as the market goes up, keeps selling, and does not give a commitment of absolute return. This last part was something I told Nimish. Because at the end of the day, the problem was that the moment you give a commitment of absolute return, you don't know what to do. We are not built to be a hedge fund. So Nimish said, do you think you'll be able to give a good investing experience this way? I said, confidently. Can we manage scale? Yes. So we started it that way. And we work very, very hard on running it in that manner over a long period of time. But the experience, if you ask me, and we had you had a China crisis in 2015. Then you had one demon fall. Then, the best time, of course, came out of COVID. Because in COVID, what happened was, it was impossible for anyone to invest. What we did was, we got the dealers in somehow. We made the dealers stay in a hotel, which was 1 kilometer away from our office in Trident BKC, made them walk to office every day. The money is already there with us in a balanced advantage fund. We only had to convert the debt into equity, which we did in that period. So what happened? Once COVID happened, people realized that what we stated, that when markets go down, we buy, when market goes up, we sell. We managed to implement over this entire period from 2014 to 20, we showed people. Once they realized that we had done what we told them, investors felt we have created a beautiful experience for investors. But it all came out of the fact that Nimish told me that in ICICI, once you create a product which is lower return, lower risk, this product will have so many customers. Because people don't need very high returns. They need lower risk. Because the 2007, 8, 9 scar was what? It was that people got scarred. And we said we should not create that scar. If you look at it, after that, the mutual fund industry has not seen big setback at all, because we have managed to ensure that the investors never get scarred so badly in a product like balanced advantage fund. And that is what happened. So I would say, but I have to give credit to our sales team, that we managed to convince our sales team. Then we had to run the product also in a very, very systematic way, that we will always do it in that manner. And frankly, at various points of time, we also had self-doubt. Will we manage? Will we manage to give a good investment experience? Will that experience remain at scale? But it has happened. So, it's a nice feeling, because investors have been happy. My sales team has been happy. Nimish tells me we created a good investment experience after promising it to people. That's what happened.
No, I think whatever you're saying is absolutely right. And from the outside, if you had self-doubt, we had a lot of skepticism. And it was almost like deja vu. I have no compunctions in admitting it, that initially when SIP came into force way back in the 90s, there was a similar amount of cynicism. कि ये 2000 रुपया महीना डाल के कौन करोड़पति बनने वाला है?
Exactly.
And then you had not just the entire category grow, but people like NJ have actually taken it to next level. NJ and now Prudent, they're just taking it to the next level. Similarly, for balanced advantage fund, I think the skepticism was always there.
Yes.
And I'll be very honest with you, I think the investor experience which you talked about also talked about giving regular dividends.
Yeah.
We thought, and I say we, let me talk about me. One of my primary instincts was that maybe the investor is getting a regular dividend, which is what is attracting towards the product. At that point of time, like I said, there was a very healthy dose of cynicism. I don't think you had too many clones out in the market, which was talking about. It took quite some time for the next balanced advantage fund to come in. So you had a free run for quite some time. So that should tell you about the inherent cynicism. So dividends as a piece, was it also an unintentionally positive theme which led to investor experience, or was that also part of the product design?
No, it was a part of the product
Day
design.
one.
It was a part of the product design. But the fact is that, see, you design a product, but think about it. Now, dividends are not part of the product design. Because today, dividends are inefficient from a tax perspective.
So now it's
So
SWP.
what happens is design has to be, product design thinking is always iterative. You can't think about it at one point of time, and after some time you have to change your product design thinking. See, even the way the product was, there was a time when we used to think we'll change our equity level once in a month. From changing it once in a month, we sometimes do it in 2020, we have done it every day, within the day also. Because the problem was that we did not foresee a situation of extreme volatility. But you know what happened in 2020? There was so much extreme volatility. So what happens is product design to benefit investors is a permanent thought process. You cannot design that I'll do this and then I'll finish it. The moment you do that, then you will realize something else has changed. The scale of the product is different. And we realized at a later point of time that you need a product with gold and silver. So that's how we managed to think of multi-asset fund.
That's the next question I wanted to ask.
That was something which happened post 2020. But so what happens is, if you look at it, how the mutual fund industry has evolved itself comes out of the fact that at all points of time, you have to think, what is it the investor wants? And we are a regulated industry. So we have to think from the point of view of regulation, what is it that the investor wants? And we have to think of it, we have to think of the risk. And based on that, we have to keep thinking.
So do you have a sort of a formalized process of collecting investor feedback and discussing it in a meeting? I'm very curious to understand the product design part of it. See, you make it sound like it is almost like a templatized version, which it probably is not. A lot of thought goes in, a lot of iteration, brainstorming.
But the point is that if you look at it, we are dealing with multiple number of investors, multiple number of distributors. You have sales team, you have Nimesh, you have people. So there's so many people involved in this. So you have as long the day you say, I'll not take feedback, then you're finished. So what happens is there is a valuable feedback system which forces you into various things. And based on that, you evolve yourself within the regulation. Because at heart, what is it? You have to give a good experience to the investor. If you don't give a good experience, the way we look at it is, don't give our goal is not to be the highest risk product offerer in the industry. The moment you do that, then scale is limited. The goal is, as long as you're trying to do it, moderate risk product in the industry, you have more capability at ICICI. If you try the highest risk now, then something will go wrong. That we don't want to do, because that has not been the goal of ICICI. At some stage, at some level, it is very counterintuitive. The least risk product may not necessarily, probably the least return amongst whatever you're expecting, but the best experience. It's very counterintuitive. And as a category, I think probably this category has tapped into something which the investor really wants. वो एक कहावत है ना, हाथी के दांत खाने के और दिखाने के और. The investor will always talk to you about return क्या है, but ultimately उसको FD plus 2% return चाहिए. So I think you've just tapped into that. The problem is that, see, FD plus 2% is what they want me to say, but I have to tell them, we can't say that. The day we say that, we are violating every rule. So we have to tell people, this is not an FD.
Correct.
And periodically, we have to tell people on TV, we come and tell people, this is not FD. This is important for us to say.
Yeah.
Because the more and more we have given people, and this last 12 years, because equity market hasn't fallen, people more and more start thinking it. And that becomes a bigger problem. So we tell people this is not FD. It may give FD plus 4 also, but don't think it is FD.
Correct. No, that was more of a manner of explaining.
Yeah.
I don't think in this day and age with so much of investor education happening and stalwarts like you and your company, I think those days are gone. वो एक टाइम पे इनकम फंड एफडी है वैसा आप लोग वो था those were the good old days or whatever you want to call them. On a lighter note, I must tell you one of the things I heard an advisor say. He was talking to a client. I usually have this habit of going and sitting down and just listening in. Very interesting. Maybe your marketing team can use that. What did he say? He says, या तो माफ करो या तो माफ करो नहीं तो अपनी वेल्थ को साफ करो. Okay, it just put it in, and I was amazed. I said, see, this is the simplicity of communication. What he needs to understand, he's also made them understand. Yeah, so that is what it is. Talking about rewiring, we talked about the product category. I'm just now stepping back. I think in this time frame of around 2006, 7, 8, one of the things which really took off in the telecom industry was prepaid. Prepaid suddenly became the next big thing, and everybody was talking about that. Paradoxically, in the AMC industry, there was no longer any prepaid. Upfront commissions went away. Yeah. What effect do you think it happened in the short and see long term? We all know it's caught on, but at that point of time when you were selling closed-end funds, you were selling simple products, and there is an ecosystem which has been nurtured on a mix of upfront and trail income, and suddenly the upfront goes for whatever reason. I'm not getting into good and bad of it. I'm more interested in learning the advisor psyche that you had to talk about.
So I come from investment side, and I don't come from sales side. And whenever I used to meet people, they'd say industry is gone.
They still do that.
And I used to tell them, how can industry be gone? And the reality was that most of them they didn't realize that finally anything good for the investor in the long run, industry can't be gone. Industry can be gone only if we mismanage the investor through our products, through our management of the money, then only the industry is gone. So I used to tell everyone in the ecosystem, and I used to tell them I'm an investment person. I'm not a salesperson. So as a salesperson, I don't know also. But for everything they would say, oh, industry is gone. I used to tell them, how can industry we go? See, there is a past experience because, say, I had spent 10 years in broking and there I was not in investment. That 10 years in broking, I remember a period where brokerage in BSE used to be 2%. Brokerage had dropped, but still nothing happened to brokerage industry.
Correct.
So I used to tell them, if my learning, I'm not in this company, I'm only in the investment side. In brokerage, I was in the business side. My learning was that price dropping never led to the broking industry disappearing in retail brokerage. So like that, this also can't happen. So please remember, as long as you are managing the money well, there won't be a problem. If you have an experience like 2008, where investors lose 50%, that is a problem, irrespective of what happens to brokerage. That's what I used to tell all the people in the ecosystem, and I came from investment side. So to me, I didn't understand that. So first, always I think there used to be a dip and slowly things used to recover. That is what I could see, whatever happened on every regulation, first a hit and then recovery. That's what I think we could see in across all regulations, which were pro-investor. But it finally helped the industry.
No, it's an interesting thought you're talking about, and it's very well articulated because sometimes you're too close to the mountain to see how big it is. But when you step back and you say that eventually things will get okay, people will adjust, the industry will adjust because it's better for the investor. I think that's a very useful point to make. I want to just shift gears now, okay, and I want to talk about the other thing which people associate you with, which has been quite a bit of the norm in the industry, and it has been challenged several times. That's the value investing. You started off, you said 133 crores you started managing, and now that fund itself is 50,000 crores. So two questions, Navin. I'm making things very simple for you in terms of asking you a question. One is, often it's been said, and you see, people keep giving you different feedback. I'm an investor myself. I talk to advisors. You keep hearing value is dead, quality is a new mantra. Over the last 3-4 years, people started telling me quality is dead, value is the new mantra. We've had instances in the industry that people have held on to a certain sector for the longest possible time, having no returns. Uh, I think being a value investor, I'm not talking Warren Buffett. I mean, that is a different league altogether. I'm saying in India, being a value investor was usually associated with not performing for long periods of time. Okay. You actually changed the entire thinking process. I don't know whether it was deliberate, whether the markets helped you, or whether that is something which was, which is a cycle which happens. You stick to your convictions, and eventually it does happen. So this whole value versus quality debate, which keeps happening. I'm just talking about two factors. I'm not talking about momentum. I'm not talking about anything else. Have you ever borne the brunt of it? People coming back and telling you, listen, you're a value investor, value का time खत्म हो गया. जैसे आपने बोला ना अभी industry खत्म हो गया. Why don't you shift gears? Or maybe a few investment bets which would have worked or not worked at that point of time. Uh, what is your take on this whole value versus quality, having been in the thick of things?
As a CIO, something people will trouble me on. Actually, value people have stopped troubling me on because the fund has done too well.
I'm saying good old days from that.
Good old days, 2007-8, I think I got into deep trouble.
Hmm.
And actually, we went to, again, finally, you go through design thinking. Then you realize that the design thinking was, we had too much of very low PE sectors like textile, fertilizer, paper, etc. So we changed it and said we have to have sectors like healthcare, and then cyclical sectors like commodities, which can actually move from one end to another. So we moved the thought process out of that. And then after that, it worked again, but it got hurt in 2016, 17, 18. So, but got used to it. But luckily, the fact is that today it's 21 years now. So it has become, and we have a lot of old money. Once in a fund, you have a lot of old money and lot of old SIPs. Things are much more stable.
What is the average tenure an equity investor stays with you?
I don't have a pakka number. But I'm saying basically this value debate, I think the value debate ended in 2022 or so. I think we had a real tough time.
In 2022?
2018 to 20 was tough. So that 2020, October to 2022 was such a blitzkrieg in value.
Yeah.
After that, people stopped troubling value people. They've shifted their trouble to all these extreme quality people.
Yeah.
They have shifted their focus. Now they don't trouble extreme quality.
Very interesting. You mentioned extreme quality. So, and I'm not going to pull you into a discussion on the valuation of some of the stocks, because I don't think that's the remit of this show. But I'm going to again use the rearview mirror. Okay, 90s, mid 90s. Okay, you had a plethora of IPOs coming in. Okay, I know because I used to be a merchant banker at that point of time. And when I tell people today that I had handled a few hundred IPOs, the jaw drops. How can you do that? But then I also tell them that hardly any company survived. I can count on my fingers. Yeah. But there was a mad rush of people coming in to buy IPOs at that point of time. Yeah. And then, of course, there was a certain period which was full of consternation. Can you take us through your perspective on this whole IPO thing? There's a reason why I'm asking you this, because I sense a little bit of deja vu happening again in the IPO market. While I don't want to comment on the current IPO market, it's not fair because times have changed, things could change, anything could change. But it's very useful for our viewers to know that in the good old days when there were mutual funds, in the 90s, there were mutual funds. There was a UTI, and the Kothari pioneers of the world had been launched and all of that. that there was this whole spate of IPOs which was happening. And what happened after that?
No, I think no, our view on the matter is simple. If the seller is more informed than you have to be careful.
If the
Seller is more informed than you, whether the seller is private equity, whether the seller is promoter, like in the case of an IPO, you have to be careful.
What happened in those days? What went wrong?
I think some of them were pure junk. Like when I was 1990 to 94, when I was an investment banker, when I go back and introspect, it was pure junk.
Oh, you were also an investment banker.
90 to 94, I was an investment banker. I think when I introspect, it looks to me pure junk. If I go back and see, I think, it is, but today our sizes are so large that the amount of money that we have invested in IPOs is negligible compared to the quantum of money that we manage actually. But having said that, I think we have to be careful. And I don't think IPOs are a big part of our portfolio and will not be a big part of our portfolio.
My point was more towards the fact that instead of getting into a DIY mechanism, if there was a vibrant mutual fund option available at that point of time, there was an option, it was not vibrant. Maybe an investor would do well to go through a mutual fund route to access equity, because too much of froth doesn't really end up too well over the medium to long term.
It doesn't.
That's what
I think we investors have to be continuously guarded. And in all bull markets, they have to be guarded. Whether they are or not, I don't know. But that is the reason why we keep saying asset allocation. Maybe in my sleep also, if I'm maybe I'll say asset allocation.
No, you are absolutely right. That's one message which keeps coming across, and it's not just from you. I think it's from the firm. It looks it's actually very apparent and clear that it's in the firm's DNA to talk about asset allocation. In fact, that brings me probably to a nuance. Again, I don't want you to wriggle out by saying I've been an investment person and that's why, I will give you a sort of a upper ka thing. I'm impressed with the way this whole category has been created. And I think a large portion of this balanced advantage fund category has been because of its marketing. Okay. To size that bet with dollars in marketing would have taken courage, because I don't think that anybody had that sort of...
My CEO, Nimish, had full faith in the category. And he kept asking me, will you manage it well? I told him, we'll manage it well. Because of that, it happened. And then the rank and file of sales team supported me. So I'm saying, see, in anything, do you know today that these are published things? Our multi-asset fund is bigger than the balanced advantage fund today. And, if you look at it, we started it 2 years back before the gold and silver started moving up. So what happened is that at the end of the day, again, if you ask me, the company's rank and file supports, we work together between the investment, sales, and Nimish supports us in this by having these conversations. That is why we are able to sometimes scale up something.
So what should be the asset allocation in asset allocation funds?
See, that is a number which will keep varying.
Just generally, I'm asking you because you said that the multi-asset
I have an opposite view. I have an opposite view. There can't be a flat number.
Okay.
The number can't be flat. If you were to ask me in April 2020, the balanced advantage weightage had gone almost to the peak, March 2020. So our view is that these numbers should fluctuate based on valuation. And it should not be...
no, my question is slightly different, Naren. You mentioned that multi-asset allocation is now bigger than BAF.
Yeah.
So I'm saying if today one were to look at an investor who wants to come into the hybrid fund category, how much would you put it in BAF category and how much would you put it in...
So after gold and silver moved up so much, now in all meetings, we are now again talking balanced advantage.
Perfect.
Because if gold and silver falls, we'll again change our mind. But right now, in any conversation, we talk more on balanced advantage fund again, because gold and silver has done too well. But go back 2 years back, no one would have invested in gold and silver, but for the fact that they invested in multi-asset fund.
No, makes people like me, our lives become easier because suddenly a lot of people start approaching you. Gold में पैसा डालने का है क्या? Silver में डालने का है क्या? And I
And they
normally
think
say,
about it at the wrong time.
yeah, and they look at it as an absolute asset class, not as an insurance
And they'll
sale or
not get
whatever.
out at the right time.
So I tell them put it in my multi-asset allocation funds. You get an exposure. Life becomes easier for somebody like me. Okay, very interesting. To some extent, would you say that? And I'm not going back to the good old days wherein you had a proliferation of products coming in because there was no strong guardrails. That the innovation has now moved more towards the ETF segment.
Yes, but again, ETF segment mein, again,
Purely from an innovation point.
Innovation point of view, I think lot of innovation is happening on the AIF side.
Okay.
Which you have been part of. So you would know that maybe a lot of innovation has happened on the AIF side more.
But for an average retail investor who's got a very good experience from you, product innovation is really not something which is looking to be taking off. It's more of an
But
ETF.
we are hoping that maybe with SIF something will happen. Let's see how the SIF moves in the next 3 to 5 years. Let's see. It's too early to talk about it, but maybe it will happen.
Interesting. I have a couple of questions to round this off with. Like the telecom industry moved from 3G to 4G to 5G, and of course, you're now talking about 6G coming in some parts of the globe. That's the network design, that's the telecommunication design, and it's becoming more and more powerful, more and more design elements coming in. From the category of uh, asset allocation funds to hybrid funds, okay, from your vantage point, do you see any ideas out there which could come in here, which could be very useful for the Indian investor? I'm just looking at 10 years from now. If we were having this discussion 10 years from now and we look back and say 2025 to 2035, this is probably a category which has grown very fast. Okay. Like you said, multi-asset allocation is now bigger than BAF. What can be bigger than multi-asset allocation is, I'm just trying to get a sense from your design thinking perspective.
If you ask me, I think the same thing may happen in ETFs also.
Okay.
That same things can, whether you look at dynamic asset allocation, may happen in ETFs also.
How would that work?
You invest only in ETFs, not in stocks.
So the wrapper is a mutual
The
fund.
wrapper will be, the whole thing is, you instead of investing in stocks, today Balanced Advantage Fund invests in stocks. Instead, you convert it, you'll invest in ETF in debt and equity ETFs. And that would be, from a cost point of view, lower. And that may take off.
Is it also possible, since you mentioned SIF, that the way
It
you
can happen, but SIF is about 10 lakhs.
Correct. So I'm saying 10 years from
It would be, I think, both SIF and ETF-based asset allocation products have not so far happened. I was of the opinion that next level it can happen at ETF-based asset allocation products.
Interesting. Very interesting.
Both ETF and SIF asset allocation products would be the next, I would say.
That's very interesting. And that gives people like me an insight in terms of your design thinking.
Because see, one of the challenges is when you do equity, when you do everything at the level of stocks, you're taking much more fund manager risk. When you do it at the level of ETF, you're reducing that fund manager risk to only ETF risk. ETF risk is always perceived to be slightly lower. So when you're going to do investment for next 10, 15 years, you know that if a person is only investing in ETF, you are less worried about the fund manager.
Interesting. I think that's a very progressive way of looking at things. Talking about progressive, I think my last question before we open it to the students to ask you questions is decades of distilled experience. You're a constant learner. You adapted yourself quite well. If there's one message you want to give to future CIOs, somebody who's listening to you today, 10 years from now, he comes on to a MF Chronicle Series 10 and ask him what has been the one learning that you've had. He says, Naren said this in this show, which I've never forgotten. What would be that one piece of advice?
No, I think the biggest challenge, I'll tell you, is, see, I have a style. Now, I cannot run so much of money on my style in the entire company. How to let other people in the company also run their money in their style, at the same time have comfort, because that is not turning out to be as easy for a CIO. See, fund manager job is easy. No, I have a style. That style is very well known to everyone because I've been a fund manager for long. But there are fund managers in my company who run funds with a different style. Now, uh, for me to accept that person's style and be responsible for that person, not turning out to be as easy. How that will happen in the next 10 years or 20 years in every AMC, I'm struggling. That part of it is not easy. Because think about it, I'm not able to easily buy many of the new age companies. I'm not able to accept some of the valuations of some of the companies at this point of time. So how do I manage that what shall I say, all these reconcile these differences within the team? And they're all right in their own way.
Interesting. It's the quintessential captain versus coach argument which you're talking about. And do you think that AI will complicate things further or ease things further for you 10 years from now when you talk to your...
See, I think the initial phase of AI will make it easy because they are support people right now. The day they move from support to decision making, the job of CIO will become very complicated. But near term, no, they are a support. They help you do a annual report analysis. They help you give transcripts quickly. They help you in decision making without taking the decision. The day they move to the next step where they can take decision, that day I don't know how a CIO will react. Right now, when I look at it, what my colleague is doing, he is trying to help us do work faster.
Very interesting.
That second phase, I think I hopefully will be some time away.
Interestingly, what I've seen in people like you, your stature, your vintage, I think there's a great balance between fund management and risk management, which you have intuitively cultivated. When you move from captain to coach, and I found that in you primarily. I talked to a lot of other people. I've seen traces of that. So, as an investor, for example, my my conviction is on the way you manage your portfolio, but my comfort is on the way you manage risk.
Because what people haven't realized, this is something which we realized about 2-3 years back. The amount of new money which we get is negligible compared to the amount of money that we manage. So if we manage our current money well, there's nothing to worry about new money because the new money is irrelevant. If I'm a new AMC, the amount of new money is significant. How can new money be significant when you manage 10 lakh crore? So risk is much more important than return. That is a reality.
Wonderful. I mean, this is amazing. I can go on for another 3 hours, and then my team will have a tough job editing it out. But I quite enjoyed this conversation. I'm opening it up to the students here, the bright young minds here.
And sir, how do you build conviction in a contrarian approach?
That's a very interesting question. By doing deeper work. And actually, Seth Klarman calls it contrarianism with a calculator. He says the day you do contrarianism just like that, without doing the work, said you're gone. You have to do that work. And our learning has been that when you're doing contrarian investing in leverage stocks, you have to be very careful. And so wherever you have done good work and where you know that the work is good, you build size. Where you're not sure, you don't build size. So wherever you are very confident of and where you continuously do work and you get the confidence, you build bigger size. This has been my learning as far as contrarianism is concerned.
And sir, what is your view on the current SME market?
I had a view it was a bubble last year. I don't know what's happening in the near term because I no longer read in newspapers about some auto retailer getting 1,000 times subscribed. I don't seem to hear about it now. I don't know. We are not allowed to participate. But I no longer seem to hear about it.
Good evening, sir. Actually, my question was, how do you predict that some stock is at his peak and now we should book the proper profits and get to the another stock? And how do you catch the new sector? What is the sector which we should invest next?
Actually, investing is not arithmetic. you can go completely wrong. So it's judgment. So very often you do switching transaction. You say, okay, at this point of time, this sector seems to be better than this sector. You sell X and buy Y and hope that it works. So contrary to what people think, investing is not arithmetic and you have a good chance of going wrong. Even if you go right 60 to 65% of the time in a proper way, that is good enough for success. So 30 to 35% of the time you'll go wrong. So I believe that there is nothing called being sure, 100% sure. And never will you know, you will know 3 years later whether you sold at the top or you were too early. Similarly, you will know 3 years later whether you bought at the bottom or you were actually too early in buying. So this is the reality.
Good evening, sir. My name is Rohan Desai, and I had a very general basic question for you. So, what's the one thing you're still learning? And down there in the auditorium, you said you need to know how to manage your finance. So, any recommendations or any tips like how young experience like us after getting placements and everything, how we can manage our money and segregate those in the appropriate way?
So you first start saving, then you decide which is the asset class which has done the worst. So then if you know which is the asset class which has done the worst, see, unfortunately, there are asset classes like real estate which require lumpy investment. So even if you want to invest, you can't invest small amount of money. But if you want to invest in office, there are asset classes like REIT where you can invest small amount of money also. So try to invest in the worst performing asset class for the last 3 to 5 years. That is the recommendation I would actually give you. Because asset classes tend to revert to the mean. That is what I would actually tell you to do.
Sir, listening to you was a quite an insightful experience. So, as a persona, like I have a curious question to you that what kind of skills should a young professional acquire to thrive in this increasingly data driven financial ecosystem?
You have to develop a temperament actually. The thing is, there's so much of data available that to bet at the worst when the markets are at their bottom and to bet against again when the markets are at top actually require temperament. And people think you require knowledge, you sometimes require temperament. And that is the challenge actually. So you have to develop a certain amount of temperament to handle the markets. And how to develop temperament is a question for which I don't seem to have an answer. It sometimes comes from just trying to do some things, then after some time automatically temperament comes. So you have to learn to have a situation where something is extremely down, you have to learn to buy. Something is extremely high, you have to learn to sell. Once you do that 3-4 times, then after that you will develop your temperament and you have to go through the pain for it.
When India built a telecom network, we just didn't make calls, we connected a nation. When S. Naren and ICICI Pru built the hybrid fund category, we just didn't get them to invest, we connected behavior with discipline. History will remember this era as a category which got built by looking at investor expectations, managing investor expectations, gleaning investor insights, and sizing it up with immense amount of energy and passion. This has been the era of hybrids, starting with the balanced advantage fund. Thank you so much, Naren, for gracing this show. It was really a very nice experience talking to you, and I think our viewers are really going to enjoy this survey. Thank you so much.
Thank you.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.